Hi YouTube, I'm Dan. I want to start this video by asking you a question. Would you ever be dumb enough to invest your own real life money into a stock portfolio built entirely by ChatGPT? And I mean without doing any kind of research into the companies that it picked. It's just blindly go along with whatever ChatGPT tells you to buy, because that's exactly what I've just done. I gave ChatGPT a hypothetical £1,000 budget and told it to build me a high yield dividend portfolio. So today we're going to go through the companies it chose, try and figure out why it chose them, and then I'm actually going to recreate the portfolio in Trading 212 and invest £1,000 of my own money. It's an idea so dumb, it might actually work. But before we get into that, please remember that this video is just for entertainment and educational purposes only. This is not financial advice or a recommendation to buy any of the stocks mentioned. The value of investments can go down as well as up, so you could get back less than you put in. If you're interested in investing, you should speak to a qualified professional before making any financial decisions. Right then, so I started by giving ChatGPT my budget and asked it to build me a portfolio. So let's see exactly what I've signed up for. Starting us off is Ares Capital, which is the largest position in the portfolio at 13%. Ares is basically in the business of lending money to companies and collecting interest on those loans. It's not a stock you hear people getting excited about. Nobody's posting rocket emojis about it, but when you're trying to squeeze as much income as possible out of a portfolio, this is exactly the kind of company that starts showing up. Next up is Altria at 11%. And yes, ChatGPT has immediately wandered into one of the most controversial dividend stocks on the market. Altria makes and sells tobacco products in the US, and despite years of predictions about the industry's decline, it continues to generate enormous amounts of cash. That's why income investors keep coming back to it. I'll absolutely admit the stock isn't exactly everyone's cup of tea, but ChatGPT clearly wasn't interested in having a moral debate. It saw a big dividend yield and decided that was good enough for a place near the top of the portfolio. Coming in at 10% is Enbridge. They operate one of the largest energy pipeline networks in North America. Every time oil or gas moves through its infrastructure, Enbridge gets paid. It's another one that's not particularly exciting. But then again, some of the best dividend stocks aren't. They're just giant cash generating machines quietly doing their thing in the background. Also getting a 10% allocation is the JP Morgan US Equity Premium Income ETF, which is quite a mouthful. The basic idea here is simple. The fund owns a basket of large US companies and uses option strategies to generate additional income. In other words, it's designed specifically for people who care more about cash flow than chasing huge growth. So it's one of the more sensible picks in the entire portfolio. Next up is Main Street Capital, also at 10%. This is one of those stocks that seems to pop up whenever people start talking about dividend income. Main Street lends money to smaller businesses and passes a good chunk of that income back to shareholders. It's not the highest yielding stock in the portfolio. It's not the riskiest either. In fact, compared to some of the other names ChatGPT picked, Main Street feels almost reassuringly normal. Then we have Realty Income, which gets a 10% allocation too. They own thousands of commercial properties and collect rent from tenants across the US and beyond. But what it's really famous for is paying monthly dividends. In fact, it's so proud of that fact, it literally brands itself as the monthly dividend company. So its inclusion here almost feels inevitable. At 9%, we have AGNC Investment, and this is where things start getting a little more aggressive. AGNC is a mortgage REIT, which means instead of owning physical properties, it invests in mortgage-backed securities. The main reason investors look at AGNC is the yield. It's huge, the sort of yield that immediately gets your attention. The problem is that yields that high rarely come without risk. So while the income looks fantastic, this is definitely one of those stocks where there's no such thing as a free lunch. Another 9% goes into Capital Southwest, and in case you hadn't noticed the pattern yet, This is another business development company, another company lending money, another company generating income from interest payments, and more importantly, another company paying a chunky dividend. Next is Annaly Capital Management at 7%, which is also a mortgage REIT. So naturally, it comes with another eye-catching dividend yield. Annaly has been a favourite among income investors for years, largely because of the amount of cash it distributes. The downside is that investors have spent just as many years arguing about whether those payouts are worth the risks that come with them. At 6%, we've got the Global X Super Dividend ETF. The name here tells you pretty much everything you need to know. This fund invests in high dividend paying companies from around the world. It's basically an ETF built around one idea: find stocks with big yields and put them in a basket, which feels very on brand for this portfolio. Finally, we get to Prospect Capital at 5%. And if you're keeping score at home, yes, it's another business development company. Prospect follows the same basic formula we've seen earlier: lend money, collect interest, pay shareholders a healthy dividend, which is apparently very, very appealing to AI. So that's the portfolio. And realistically, it could have been a lot worse. There's a clear strategy here. We've got business development companies, REITs, mortgage REITs, income-focused ETFs, a tobacco company, and an energy infrastructure giant. So now let's head over to Trading 212 and start building this portfolio. Okay, I've got logged in and I've just loaded up my account with my £1,000. So the first job is to create a brand new pie. We'll select create a pie, and now I'll just go through and add in each company from the list that ChatGPT generated. All right, that's all of the companies added. So next up, I have to edit these allocations so that they match with the amounts we mentioned before. Now, of course, this fabulous pie needs a name. I think this should do, so let's create this. And now the scary or fun part, depending on how you get your kicks. Now it's time to fund the pie. And just like that, we are funded. That's £1,000 invested into a portfolio I didn't build, didn't research, and probably shouldn't trust quite as much as I do. So I guess the experiment officially starts now. If you've got any thoughts on this portfolio, please let me know in the comments. I'd love to know which holding you think is most likely to cause me problems. And if you enjoyed the video, a like and subscribe would be massively appreciated, especially as this portfolio is highly likely to end up losing money. I need all the sympathy I can get. Thanks for watching, and I'll see you in the next one, where I'll check back in after 1 month to see how this portfolio is performing.